Hello everyone, this is Nuresh Mirani from nureshtech.co.in. So I had tweeted about putting up a post yet again on the scenario currently, which is very similar to what happened in 2012. So to make it easier, what I've decided is to make a video explaining how we could time the bottom recently. So let me first take you to the time period of 2010 to 2011. Now let us look at this correction. Now if you look at this move, what happened is in the first part we saw a strong rally in the end of September, start of September to November 2010. Now this was a strong move wherein we moved up from a low of 5300 to a high of 6300 in a matter of 2 months. And this is one of the unusual times wherein the markets also went up as well as the India VIX and the IVs. So it was a double whammy for an option seller. And that was one of the worst times for a lot of option sellers, those who were selling strangles. And this is how we topped out, and say we almost topped out on the day, Diwali day. You may go back to look at the videos of what were the sentiments back in 2010 Diwali, and you would know how bullish people were. And for the next 1 year, what happened is the markets continued in a lower top and a lower bottom formation. So we were making a channel like this, and this continued for almost a year. Similarly, on the downside we had lower bottoms, and the channel formation was something like this. So the correction started right from the top somewhere on 8th to 10th of November 2010, and we bottomed somewhere around 20th December 2011. So that was almost 13 months roughly. So that was a 1 year correction. But what is interesting to see, in the end of it, we started seeing similar bottoms and very strong recoveries. So we saw bottoms around 4720 a couple of times. Then we saw something around 4600, 4650, and then another final bottom at 4530. Now if you see, the difference between them is only 100 to 200 points. That's roughly around 4%. So this is how the markets were shaping up at that point of time, and this is what we call as a classic falling wedge pattern, wherein we keep making newer lows but the difference is very small. And in the end, generally in our Indian markets, we've seen a light, say a small dip below the trendline supports as well as the falling wedge to trap a lot of people. So we saw that only for a couple of sessions here. And post that, once that falling wedge was broken out somewhere here, we saw a strong rally. Now let me show you how strong this rally is from 4530 to 5630. Now that's on 20th December, and this is somewhere again 20th of February. That is 2 months, and a rally of 20 to 24% from the lows. So 4530 to 5630 in 2 months. Now this was the rally. Now this took a lot of people by surprise. We also saw a nice little uptick in volumes. Now what happened post that was a little more interesting in terms of how the markets tend to trap a lot of people. So out here, when the markets broke out above 5200, 50, 5300, people started becoming bullish. All the shorts got trapped, and we saw a strong move to 5600 in the next 10-15 sessions. And post that, we saw a correction from 5600 to 4800, and we went back below the channel momentarily, say only for say a few sessions below it. Now post that, so roughly the line was somewhere here, and this is where we stayed for some time. Now by the end of it, we were again into a sentiment area wherein people said we'll go back to 4500 and so on and so forth. We made a nice double bottom here, and we saw a strong recovery. So after the strong move, this is a boring correction because this took a little longer time. So this was somewhere in February, and we bottomed out in June. Now what I've been saying consistently in my previous post is the current correction is very similar to what happened in 2011. So let us look at this correction. So we saw a strong move from 6000 Nifty to 9000 Nifty, and a good part once the elections were through at 7200. but we had kept on seeing higher tops and higher bottoms, so we were consistently making higher tops like this and higher bottoms like this, and we started breaking it somewhere in at 8600, 8800 in this area. Now what is interesting to see is the last move going into the RBI rate cut was very interesting. We saw a sharp move from somewhere closer to 8000 to almost 8900 once and 9000 again. So this is where we saw the peak of optimism. We had 30,000 Sensex t-shirts around the world. So a lot of bullishness was around here, with a lot of broking community having huge targets for FY16, FY17, FY18, maybe FY20 also. And suddenly in the next 1 year, what we see is a correction wherein we again go lower top and lower bottom, and a similar channel formation like 2011. Now, thing to note out here is that every time we went to the same topping area, we saw a sharp correction, but by the end of it, what we started seeing was we saw a couple of bottoms around 7500 and a little bit of a pullback, then at 7200, and then two bottoms around 6900, 7000. So this were small bottoms in terms of the amount of time taken, as well as not sharp corrections, given that we've gone into a trend. So this is what we call as a falling wedge, not exactly the one you would like. And we also had a channel bottom somewhere closer to 7000 to 6900, 7000 odd levels. Now my expectations were closer to 7200 to be a bottom. So my expectations were closer to 7200 bottom. So something like what happened in 2012, we did not go back to the lows. But in our case, we saw in 2015-16, in 2016 what we saw is we went below it for marginally a few days. Now the big problem is people look at the screen, they look at the low at 6850 and then say markets fell by 1000 points. Now what is interesting to note is how many days does it stay below such important support levels to scare off people. So if you look at the first day, we closed at 6976. The next day we closed at 6980. All these days we were above. This day we closed at 6970. The day before the budget we closed at 7000 plus. On the day of the budget we closed at 6987. Now if you notice, we did see two lows at 6870 and 6820, which were marginally there for few hours, or rather few minutes in the extreme low case. So we did not really see markets sustaining below 7000 levels, but the fear is enough to stop people from buying, and that is where I came out with a detailed view quite a few times, as well as a correlation with Dow Jones, which has done amazingly well in the last 1.5 months, much more than what I expected. In the same way, Nifty has also moved up from 7000 to almost 7900 today, and we've started seeing a lot of mid cap, small cap participation also in the last 10-15 days. So that's a good indication. At least the portfolios would have done well. Now that what has been passed, and I would rather not boast about getting this right, because there is always a chance you get the next one wrong. So let us see what is the scenario right now. So what we see here is we've broken out of the channel. Now this is where a lot of say technical parameters coming in terms of how the trend has changed. So the downward channel is crossed, as well as we are about to cross another say a bunch of highs if we cross about 7970 to 8000, because this is where we have a bunch of tops and bottoms previously. So we have three bottoms here, a couple of tops here, so a couple of tops here. So this is a critical area. But post that also, what we'll see is a lot of people will get bullish moment we do that also, and we've seen people getting bullish in the last 5 sessions after a strong move from closer to 7500 to 79 20 30 in the last 4-5 sessions. So is this the time to get bullish, or is this the time to get cautious? So let us look at what happens in a channel breakout previously also. So in this case also the markets broke above the channel. Will we see a move which is as fast as this? I doubt. but this is something which you cannot time. The same way, like you have to buy at 7200 to 7100 and digest the down move to 6900 as a positional trader or a medium term investor. So in the same way, you may not be able to catch the top here for the short term. So I believe at 7900 to maybe this top, which would be tough to cross, say which is closer to 8300. Similar to the case here wherein we could not cross that 5700 mark. So this will be a good zone to increase cash, so that in the next correction you have gunpowder, as well as if you have put in fresh cash around 7000, then there is a decent amount of money made in this move, because a lot of stocks are up between 15 to 50%. So that's a very strong return in a small amount of time. So it is good to take some profits off the table so that you can use it in the next opportune time. So partial profit booking if you've put fresh cash. Alright, so this is what we are looking at. I would be expecting this zone the next few months to be a bit boring. Well, you never know, but this is my expectation. So maybe this would be an area to sell, and we would then wait down for a retracement. I'm not taking a bet as to where we retraced, so we'll wait for some signals of topping out in the short term. But the simplest call to make right now is increase cash, do partial profit booking, and this is again a bit contrarian to the same view we had at 7000 levels. So maybe we might be early or we may not be, but this is a good time to increase cash. You may get a lot of opportunities. And one more thing why I believe I should have cash at this point of time is, whenever we've seen such a major trend change, so I believe this could possibly be a longer term trend change, and we might have bottomed out at 7000 to 6800. If that is happening, then we see a new sectors, a new set of stocks actually take the lead over the next few couple of years. So if we go back to 2012, everyone would consider pharma as something like a defensive sector, consumers again sort of a defensive sector, and a lot of other companies were considered to be defensive. And what we saw is this sector, actually we had a bunch of sector between healthcare, pharma, consumers and much more, which were not in the the limelight like infra etc. They did extremely well over the next 2 years. So I would be watching out for the next few months to give a hint on technicals as to which sector will take the leadership. So in that case, would like to participate at that part of the sector. So it's good to be having cash here, because there could be some sort of a sectoral shift as well. So that's the shorter term view, and in the longer term continue to remain bullish. And I believe the next dip, wherever it comes down to, would possibly be the last opportunity for a strong investment return over the next few years. So, and like I've explained in the previous view, we've had terrible returns on a CAGR basis, on a PE basis, on a various ways. If you believe in equities, now in the next few months again we'll get another opportunity. So if you've missed the bottom at 7000, buying at 7500 3 months later is almost equivalent. So I believe in the next few months you'll get another opportunity. And if you cannot time it, let's spread it out over the next few months and say increase allocation to equity is what I would believe is a good strategy right now. So thanks a lot. Keep reading nureshtech.co.in. We have a lot of stuff I've been writing for the last 10 years almost now. So we have almost 2500 to 3000 articles, and we keep posting on various social media. So you can follow us on our social media links as well as the website. Thanks a lot everyone. Hope we get another opportunity in the next few